Good evening, ladies and gentlemen. I am Bharati, moderator for the conference call. Welcome to Som Distilleries and Breweries Limited Q4 FY21 results conference call. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone telephone. Please note, this conference is recorded. I would now like to hand over the floor to Mr. Vinit Bolinshkar. Thank you, and over to you, sir.
Thank you, Bharti. Good evening, everyone, and thank you for joining us on the Som Distilleries Breweries Limited earnings conference call. We have with us Mr. Deepak Arora, CEO of Som Group, and Mr. Nakul Sethi, Director of Finance of the company. We will initiate the call with opening remarks from the management, following which we will have the forum open for question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in nature, and a detailed statement in this regard is available in the results presentation shared with you earlier. I would now request the management to make the opening remarks.
Thank you, and good afternoon, everyone. I would like to welcome you all to Som Distilleries and Breweries Limited Q4 and full year FY 2021 earnings call. Hope you all are keeping safe and healthy and are looking forward. During today's call, I will discuss the performance highlights, a little bit about industry environment and outlook for the company. I will then hand over the call to Mr. Nakul Sethi, our Director of Finance and Strategy, for a detailed discussion on the performance, post which we will open up the call for an interactive Q&A. Our performance during initial month of the financial year, which are the summer months and our peak season, was severely impacted due to the pandemic related to the nationwide lockdown. Subsequent months, even after the lockdown, was difficult for our business, given the limited opening of the trade channels and various other restrictions which were beyond the control of the company. All these factors severely impacted our performance. However, and despite the prevailing challenges and loss of our key business season, we continued our focus on gradually increasing our volume sales without compromising on too much of profit. It is evident in our gradual improvement, which is achieved sequentially through the quarters. Building on the momentum, we recorded a beer volume of 20.9 lakh cases in Q4 FY21, which is a 31% higher than Q4 last year. Strong volume growth resulted in a total income of 1090 million, an increase of 12.5% compared to the same period last year. EBITDA for the quarter was rupees 91 million compared to a loss of rupees 2 million Q4 last year. We recorded an EBITDA margin of 8.4% during the quarter. Overall, the raw material prices remained flat, expected to remain stable. January, we had infused new glass bottles, which is the main raw material in the beer industry, in both of our Bhopal and Odisha facilities, in anticipation of the peak season demand, which has had some impact on our margins. Our PAT for the quarter was rupees 37 million with a margin of 3.4%. Our recently launched Woodpecker beer continued to gain market share and sold over 1 lakh cases in the first year of its launch, despite the prevailing challenges. This is a very encouraging sign for us. We expect strong growth in the brand going forward. We will continue to evaluate and launch it in other select markets and outside the country, build on the momentum and the quality of the brand. We had a very difficult start to the year, but the relentless focus of our team has helped us to return back to profitability. We expect to continue the growth momentum going forward. Due to the second wave of the pandemic, our operations were impacted in the month of April and May this year. However, unlike last year, it was not completely shut. Also, with the gradual lifting of lockdowns by state, we anticipate a better recovery in the month of June. Second wave has led to short-term uncertainties, but we are confident of strong recovery in the latter part of the year, barring any external challenges which may come. Thank you. This, I would like to hand over the call to Mr. Nakul Sethi, us in detail.
Good afternoon, sir. Our consolidated total income for the quarter was 1090 million, of 12.5% compared to quarter 4 last year. The revenue increased by 16% to rupees 928 million during the quarter. IMFL revenue stood at rupees 146 million, marginally lower compared to quarter 4 FY 2020. Quarter 4 FY 2021 realization per case for beer and IMFL was rupees 45 and 708 respectively. In terms of volume mix, beer accounted for 91% of the total volumes quarter was by IMFL. Of the total sales value, beer accounted for 86% of the total net revenue. As of March, it stood at 89 million. Cash and cash equivalent was 145 million, resulting in a net debt of rupees. Gross debt to equity ratio was 0.74x. The quarter we completed capitalization of the capacity at Bhopal. All our investments are capitalized and reflected in our balance sheet. For the year, we have no major capex planned in the near. In the year, we reduced our total debt by 114 million. Cash flow generation for the year remains strong with cash flow from operations of rupees. In terms of performance of our mainline brands, Hunter recorded a volume growth of 47% compared to quarter 4 last year with 9.2 lakh. Blackford almost doubled its volume to 4.2 lakh cases. Our Cool sold 6.2 lakh cases compared to 5.9 lakh. Utilization levels during the quarter, considering the capacity at Bhopal, operated around 30% capacity utilization. Karnataka and Odisha facility operated at 45% and 55% utilization level. This we would now like to open the floor for Q&A.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. First question comes from Vijay Ramchandani from Pragya Equities. Please go ahead.
Hello.
Hello.
Yeah, hi sir. Thank you for the opportunity. My first question, hi sir, hi. My first question is with regard to the realization for beer. It has come down for Q4 as compared to Q3 as well as last year. So what was the reason for it? Because the percentage of Hunter is high actually in this quarter.
Yes, but in certain markets, the realization for Hunter is lower as compared to other states. Like for example, Odisha is lower as compared to what we sell in Karnataka and in MP. Sold a lot of Hunter, about close to about 4.5 lakh cases of Hunter were sold in Odisha alone during the quarter.
So, what is the realization in these two states?
I think about 550 is the rate in, for example.
Okay.
It's about 450.
Okay, sir. Next, I want to understand what are the challenges that we are facing for our IMFL sales, because in last 3 quarters it has been on the similar levels with respect to IMFL. So could you please highlight what challenges exactly do we have in this?
I think the main challenge which we are facing for IMFL is that Karnataka is a tough market for IMFL. I think taking more time for us to take market share there as compared to what we have done for beer.
Okay. Also, if you can share some more light on the recent today's press release actually on our export order. Can you please throw some more light on this? What would be the contract value and other stuff?
I mean, about export is about close to 2.5% of our total sales, of our net sales. This order we expect that that I would say we expect to go to about.
I'm sorry, sir, I missed you.
3.5%. We're expecting
3.5%.
of exports as a percentage of our sales.
Okay. And lastly, if you can share in detail the impact of second wave of COVID for us, because Q1, what would be the impact on Q1? Q1 being the most important season for us.
I think in terms of numbers, we will not be able to any currently on the numbers, but luckily some markets were open during this period. For example, Karnataka was partially open and so was Odisha, and we are seeing a lot of pent-up demand coming in from MP and the other markets once the lockdown restrictions have been opened.
So now all the markets are open for us?
Almost all the markets are open, yeah, with restrictions. With certain restrictions.
Okay. Also, if you can share till how much time will we have the impact of this new glass bottles on the margins? I mean, just want to understand when we can actually get back to our mid-teen EBITDA margins.
I think it will be better if we are looking for a year of normal operations. I think for that, 22, 23, we expect that all the investments as far as bottles, we start getting those returns back for all our investment which we have made.
Any internal target we have kept for the utilization for current year for all 3 plants, sir?
A very subjective question. See, we cannot guarantee the third wave or second wave, right?
Right.
It's difficult to answer that. No one can answer that question. It only depends on external factors and challenges which the country will face. Very difficult to give a number to that. Just hoping that the 8 months left of the quarter, we run with no restrictions.
Okay, sir. Just assuming if we were to not face any other issues, any external issues for the rest of the year, the question was actually for that, assuming no problem for the rest of the year.
If there are, other restrictions or other challenges in terms of operations or business and all, about 350 to 360 crores as a top line. This is about
So 350, 360 crores for the entire year, you're saying?
yes.
Okay, sir. I'll come back in queue. Thank you so much.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. And participants are kindly requested to restrict with 2 questions in the initial round and may join back the queue for further questions. Next question comes from Chirag Maru from Keynote Capital. Please go ahead.
Yeah. So I want to ask a broad-based question that since last 6 to 7 quarters, we are seeing that on YOY basis, beer sales have been decreasing in entire India. So what's your outlook over there, and how do you see that panning out in future?
Good question. See, as far as the brand traction is concerned and the acceptability of the products are concerned, we're getting a very good response in the states where we are operating. Unfortunately, we have made these investments in the last 2 years, which were supposed to come to fruition in terms of capacity utilization, in terms of branding. However, we've not got a clear run the last 12 months to actually show that. But keeping the brand traction in mind and keeping the market share percentages in mind, we're very confident of doing well this year, provided things go unrestricted. Because as restriction happens, there's a lot of things like availability, efficiencies.
Sorry to interrupt, your voice is breaking.
I said, in terms of the tractions of the brands, we are in a fantastic place right now where the acceptability is really, really good. The only thing is that it needs an unrestricted run for the next 8-9 months to actually show that apart from our mother state, we are actually doing very, very well in the other states where we are participating. So, but those numbers have not come up on board in terms of expectations because of the last 2 years, the peak seasons being affected because of Corona. But as I said in my address, if we get a 8-month unrestricted this thing, you will surely see very good numbers.
Okay. So my second question is related to advertisement spends that we are doing over the years. So we are penetrating into a new market.
Sorry to interrupt, Mr. Chirag. Sorry to interrupt you. So your voice is breaking, sir. Can you please come to a network area and speak?
Yeah. Am I audible now?
Yes, sir. Please go ahead.
So my second question is on advertisement spend. Like currently, on basis of net sales, we are doing around 10 to 12%.
Sorry to interrupt you again, Chirag, sir. Can you please join back the queue, sir? Because your voice is breaking. So can you please join back the queue for your question, sir? We will check your line.
Sure. Okay.
Thank you, sir. So we'll take the next question. So the next question comes from Chetan Cholera from Pragya Equities Private Limited. Please go ahead.
Yeah. Hi, Deepak. This is Chetan.
Hello, sir. Hello.
Yeah. So I just wanted to understand if we want to create the same capacity plants which you have now, and even creating a brand, what kind of overall money required? Like our current current enterprise value is roughly around 500 crore. So what your estimate is, if you want to create another same capacity like you have, and the creating a brand, what kind of money is required?
Isme, sir, it actually depends that ours is now a state-of-the-art facility in Bhopal and Karnataka. We have invested in the latest technologies. To have existing plants where there is old technology being involved. But I would say for around 250 odd crores, what is required to build up facilities per unit, I think.
Now, how much is your voice was?
Around 750 crores. Today's valuation.
And the brand, creation of brand?
And brand is separate. The brand valuation obviously will depend on the volumes which we achieve. Brand value is a very objective and open question. But equipment-wise, it's worth around 750 crores.
See, I'm a shareholder in almost all the alcohol listed companies. The only losing stock which I'm holding is some distillery. And various forum I have suggested you that you need to increase your promoter stake. Whatever you may need to do, people will not believe once before you reach to certain level of promoters holding. So I don't know. There were many opportunities of even pricing wise also. I don't know what's there in you people's mind, but any or kuch bhi kar lo, nobody is going to believe you unless and until you reach certain threshold promoting.
Sir, if that was the case, why would the promoters subscribe to warrants at 271 rupees when the share price was not even 100 rupees?
Yeah, but then giving open offer of 20%, that was the only requirement also.
That is the case. The promoters would not put the companies under subsidiaries if they wanted to do anything of that sort. Idea is the business.
I'm not doubting any integrity wise. I'm telling that you got many opportunity and what I'm in the market for last 30 years, so I know what market believe, what market don't believe. Market believe where the promoter stake is at certain level. So whatever you do, whatever the other efforts you do, it will be best for me. So I still suggest that you try to think it over and give open offer of 20% and increase the stake. And these are the one of the lives. People are not getting this kind of opportunity in lifetime. The only line I'm seeing lockdown is still the closed shop of alcohol. So these are the only place I see the queue. So and see the young people we have in our country. I don't know why are you taking so much of time?
Sir, I respect your suggestion. However, we are right now focusing on the performance of the company. And we are looking to grow the company. Not about the promoter, it's about the company and its brand. But we will take your suggestions, sir, in a positive note. Thank you for the same.
Okay.
Thank you, sir. Yeah. Thank you, sir. So next question comes from Chirag Maru from Keynote Capital Limited. Please go ahead.
Yeah, thank you for connecting me again. I'm so sorry I missed my question at earlier time. That I just wanted to ask, like, as we are penetrating into new areas, we already are doing 10 to 12% of our net sales as advertisement spend. So what's company's outlook over there? Are you willing to keep it in the same levels, or you are willing to increase? As you said, newer areas are seeing some good traction to you. So what's your outlook over there?
We have a very balanced outlook, Chirag, in this. There are two components to it. One is the distribution and the second is the advertising, as you said. because the advertising space is restricted and we are relatively new in the new market because we've been operating in the new market since 2018. So for us, first thing is to achieve optimal distribution. The optimal distribution itself gives us very good traction in terms of numbers. And once we have the full distribution in place, that's when is the right time to increase your visibility and advertising spend. So unfortunately, the last 2 years where we wanted to be, we have been literally pushed back in the last 2 years. So the idea is to first complete the distribution properly and then go for the visibility.
So can you give me some distribution touch points that you have currently?
So it varies from state to state. As for example, Odisha has 1100 points of distribution, while Karnataka has 9,000 points of distribution.
And what was it last year?
Compared to these are the industry distributions which I have told you. Now, Odisha, some parts were totally shut. So if I give you a distribution number, it sounds very skewed. So I don't want to do that. Same thing with Karnataka. Karnataka on a good run, when everything was open, we were at 65-70% of the distribution. And in Odisha, we were at around 55% of the distribution. And we were clocking those revenues in 1920 on those distribution points. So if we optimize our distribution, we automatically get the numbers. Mm-hmm. And then once we are available everywhere, then it's the time to be seen. That's how we look at things.
Okay. 2 more questions. One on base of subsidiaries. So currently our subsidiaries are still making losses. How long do you think that it will take them to become profitable? And second question would be, if we see such good big amount of size of industry available to us in India itself, why are we thinking to export the brand that we are having right now?
Yes. Let me take your export question first.
Okay.
It's a very proud feeling for any Indian beer to get exported. Go on. Because there are not many Indian beers available apart from the big ones like Kingfisher. So it's actually a very good thing that someone is able to export to countries like US, Scandinavian countries, where the drinking standards and the quality of the product is very, very high. So it's actually a proud thing that an Indian company is exporting and getting orders. Regarding your first question now of subsidiaries, it's a function of EBITDA, where the EBITDAs are positive. It's just that again there's no continuity which has been given to these 2 subsidiaries in the last 2 years because of COVID. So once we get that run, obviously the cash flow is positive. There's no question about it. It's just that if the scale doubles or your variables come down, then you start showing profit in the companies. Because you've already invested a lot on your fixed costs. Just a matter of time where we get 12 months and we deliver the numbers.
So what's your current outlook for the company? How you're thinking to pan out in this particular year, and your short-term view for this year and your long-term view for next 5 years? Like how you're looking for the company and where do you want to reach and how do you target it? Yes. What's your strategy towards that?
I think Nakulji, first I'll do a little bit of numbers, give a precise idea. We're looking at 350 odd crores turnover this year. Which if next year by God's grace we get 12 months, we'll take this up to around 500 crores of turnover. And once we touch that 500 figure, you'll see that then a year-on-year projection will be, you can easily say 20-25% growth, because then you have optimized your distribution, as I said. Then it's more about advertising and visibility. Regarding your second question on on my outlook about the company, see, at the end of the day, the product should speak for itself. If the product is getting accepted, it's just a question of market efficiencies. If your product is not accepted, then you do whatever you feel like. You're not going to win the battle. Because with the limited spends, on the basis of distribution strategy, if we are able to clock the numbers which we have been clocking, there is no other Indian company in the last 3 years who have clocked the numbers in new states which we have. So, in spite of having Indian companies which have been there before SOM. So, the product is accepted. Now, it is only a question of expanding that footprint and getting a consistent environment to do that. If no amount of advertising will help if the distribution points are shut. So that's this thing, and we are very confident of optimizing the distribution bandwidth for us if we get a good consistent run for the next 8 months.
Okay. So for the complete current quarter, means Q1 FY22, was the home delivery kind of thing available to you?
See, home delivery, for example, Karnataka had home delivery, Madhya Pradesh didn't. Delhi did not. UP did not. So, Odisha had. But if you look at the industries here in home delivery footprint, industries have crashed by 70-75% of that month. So, even if I have a good market share, you will not see it in the base value.
Mm-hmm.
And in spite of the market crashing and home delivery being available to us, we have gained market share in these states where home delivery was allowed. But because the industry itself has fallen, I'm not able to show you the number, but I'm able to show you the market share. So the correct metric would be market share gains. So wherever, it's very safe to say that wherever there was home delivery, we have gained market share.
Okay. That's it from my side. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Mr. Vinit Bolinchkar from Ventura Securities. Please go ahead, sir.
Yeah, thank you for taking my question. I would like to understand what is the moat of the company and competing strategy that you are adopting that is helping you gain market share in all these areas. So what separates your company to, that is helping you accelerate your growth?
So there are 3 factors. Our investment in technology ahead of the curve. We are one of the very few companies who got our bottling lines completely outsourced from Germany. Our process techniques are also all exported into the country, which match with the world leaders, which helps us to churn a good product. Number 2 is our distribution bandwidth. Because the product itself is good, the first category, and there are not many options available in the mainstream, it gave an opportunity for us to get into the distribution and get our products tried. Once we did that, we realized that our products have a very high value for proposition in terms of what the perceived value of the products versus the pricing of the products. So, which is helping us gain market share in all the markets where we are operating, even in brand sensitive markets. So, that is what, and third is I am now probably the second or the third generation into the business, And the leadership team is also a very sound leadership team which has been in the market for good 15, 20 years. It's not just splurging the cash and building the brand and that. It's actually a very hardcore business where accruals are being used to grow the share. So that comes with an experienced leadership team and an experienced team who believes in this vision. Those are the 3 points which I think differentiate us from anyone else. It's because we are not dealing with a business where we are just spending cash. We are actually making EBITDA positive margins from day one wherever we are operating.
And who would be your closest brands that who are giving you the run for the money?
We are competing with all mainstream brands like Kingfisher, Tuborg, Hayward's, SAB Miller, and Bira.
Okay.
So these are the mainstream where we compete.
Okay, thank you for taking my question.
Thank you, sir. That would be the last question for the day. Now I hand over the floor to the management for closing comments.
Thank you, everybody, for joining the call. I would just like to thank you for listening to us patiently and believing in the company. I would like to assure everybody that the last year has been very, very tough for everyone. However, we are committed to the company and its cause. We are looking at growing this company and taking it to the next level. And we are fully committed to the company to take it to the next level. Thank you very much, everyone, for giving your time today. Thank you.
Thank you, sir. Thank you, everyone. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.